to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. Over the weekend, the Enforcement Directorate raided the offices of India's most valued startup, byjus, alleging foreign exchange violations by the company. Now, in its statement, the ED said the raids were based on complaints raised by private persons, and it accused Baiju Ravindran of being, and I quote, elusive. Among the many allegations made, the issue that does raise concerns is the fact that byjus has not released audited accounts since the year 2020-21. In ED's words, the genuineness of the figures provided by the company are being cross-examined by banks, end of quote. Byjus, on its part, has called it, and I quote again, a routine inquiry and claims it is business as usual. Byjus is the latest and the most high-profile of cases of alleged governance lapses in the startup universe. From the very bitter public boardroom battle at bharatpe, where founder Ashneer Grover's employment was terminated over alleged financial irregularities, to Zilingo, where founder Ankiti Bose was sacked for alleged financial wrongdoings, to Go Mechanic, where due diligence done by EY for SoftBank raised several red flags about discrepancies in revenue and user metrics, forcing founder Amit Bhasin to admit to financial lapses in a LinkedIn post. The list of companies in trouble is getting longer. Now, I don't wish to generalize, but there is a larger issue of a lack of transparency and an information asymmetry. Most of the time, when we ask companies for information on financials to support the claims that are publicly being made, we're told, no can do, we are private. It is the same when we ask investors. Now, this culture of convenient silence doesn't bode well for companies that claim that they want to be world-class. These instances also bring back the issue of board governance or lack thereof. Corporate investigation firm Kroll, when it investigated frauds post-2021, remember that was the year of record funding into startups, found that investors were being led by FOMO. That's the fear of missing out. And the casualty was due diligence. So that brings us to the question, is credibility at the risk of becoming the victim at the altar of ambition for Indian startups? Joining me on the program today, Vineet Rai, the managing partner of Aavishkaar Capital. He's also on the Startup 20 task force for the G20 and part of the executive committee of the IVCA. Also with us, Alok Mittal, the co-founder and CEO of Indifi, and Anirudh Damani, the managing partner at Artha Venture Fund. Gentlemen, thanks very much for joining us here on Young Turks. Always good to have you. Let me start by asking each one of you of how concerned you are. And Vineet, I'll start by asking you, do you believe that what we are seeing today continue to be only aberrations, or are these symptomatic of a larger malaise of easy money and hence no accountability?
Well, Shireen, I think it's easy to say that easy money made it possible, but I think we have to first accept that the startup ecosystem in India is very young. We are talking about an ecosystem which actually saw its first unicorn as long back as 2015, and the general growth has taken place in last 7-8 years. And today you have people dropping out from class 12, class 10th, and graduations to become entrepreneurs. Now, when you have such young folks actually walking in and starting businesses, it is not going to be surprising that their understanding of what compliance, what governance, and what management is going to be challenged at the altar of investing, growth, etc. We also need to take into account that the startup ecosystem has many actors, not just the founders. We as investors and many different kinds of investors. So you have early stage investors, late stage investors. And then there are all kinds of accounting firms, compliance and forensic firms, which also play a role. Given all that, I think one of the biggest challenges that I have personally seen is this obsession about creating unicorns and the chase for valuation. As if entrepreneurship is a shortcut to becoming a billionaire. Unfortunately, and you can ask Alok, who's actually sold one company, became an investor, and has actually turned into another entrepreneur again. I think entrepreneurship is about creating something. It is about building an institution and actually having the joy of building it, and not a shortcut to being a billionaire. Until that time, we continue to sell India as a destination for unicorns, etc. You will continue to see this error of judgment from founders, but not from every founder, from the founders who are very successful.
Yeah, and you're right in pointing out that there are many actors, and we intend to talk about each of those actors. This is not to rest the blame only on the doors of founders, Vineet. And I want to pick up on the issue that you raised, that this is perhaps teething trouble for the Indian startup ecosystem, which, to be fair, is still about 2 decades old. If you look at it, it's in entirety, but the real growth has come in the last 15 years or so. So, Alok, let's pick up that. Couple of points raised there by Vineet, that teething trouble, nascent industry, nascent business, young entrepreneurs that require adult supervision. But more importantly, what we've really seen in the last few years, specifically the last 5 years, is this unhealthy obsession with valuation and the chase to become a unicorn, which in Vineet's words has put pressure on founders and investors not to ask questions, and founders to justify any means to get to that end.
First, Shireen, thanks for having me for this discussion. I see the picture slightly differently. Right? I think it is only in the last 5 to 7 years that Indian technology markets have offered an opportunity for hyperscale in a very short period of time. The response of the founders to grab that opportunity, in my mind, is completely understandable, whether you look at it from a impact scale standpoint, or you look at it from a wealth creation standpoint. I do think that both of those are attractive goals to pursue for founders. That is what attracts many of us, to the startup space. However, what this has done, this rapid growth has given very little time to develop governance systems that typically could be developed over a 5 to 7 year period. Right, that is now getting crunched into having to be done in a 2 to 3 year period, and for good reasons. Right, even as we remain private, if we are gaining very quickly in terms of number of customers we affect, number of employees we affect, in some sense the externalities of our business, then it becomes imperative that we are setting those governance processes in place. But we need a playbook by which these governance processes can now be accelerated in a space of 18 months, 24 months, whereas the entire supporting ecosystems, consultants, advisors, independent board members, that whole ecosystem is used to delivering that standard of governance in a 5-year time frame and not in a 2-year time frame. So I do think that there is a genuine ecosystem capability issue here, rather than necessarily the desire of founders to ignore governance at the altar of growth.
Okay, so you're saying it's a capability issue. And, to your point on entrepreneurs chasing impact and wealth creation, absolutely nothing wrong with that, as long as it is legitimately done and it's done for all stakeholders involved. But Anirudh, to the point that Alok was making, and to pick up on what Vineet said as well, the lack of capability in being able to address some of these issues, how legitimate is that today? I mean, let's talk about some of the companies that I named that are in trouble, and I don't want to get into specifics of any one of them, because these are allegations at this point in time in the case of byjus. But the fact of the matter is that there are marquee investors sitting across these companies. These are investors who've been investing in global companies for the last several years, several decades, in fact. What explains the fact that you cannot put a playbook or guardrails in place here in some of your largest investee companies?
So, thank you, Shireen, for having me, first of all. And I agree, first of all, with both Vineet and Alok's points here. See, as a startup ecosystem, and I'm much younger in the ecosystem than both of them, they're stalwarts. But if you think about it, we had just stood up as an ecosystem and we started leaping before we could walk. So today I don't even think we have enough experienced professionals to manage the kind of innovation that Indian startups are putting out, right? When you look at, I think in 2022 to 21, you're looking at 40, 50, 60 unicorns in a very short period of time. Each one of them, is challenging all the regulations, challenging, the years of guardrails put up by the government. Is there enough people today even to guide them on how to, structure their transactions? Is there enough people? Is the banking system even ready to take the kind of, service that these companies require, right? So we literally are dealing today with the capability issue, right? We're leaping at this point as a country in the startup ecosystem globally, but do we have all the systems behind us that are ready? Again, I come back to Vineet's point that, like we've lost out on deals during the startup boom because we wanted to focus on due diligence. We want to take our time to meet the founders, to go through the books. And because there are other investors that very quickly want to close a deal, we're losing out on deals because of due diligence. Now the system has completely changed again. We're back to where we have enough time to complete a deal because of the funding freeze that has happened. But you do have these situations in the ecosystem when things get really, really hot. And it becomes very difficult for investors who want to do the kind of due diligence, they want to get deep into a company, that they end up losing deals because of the kind of pressure that is coming on.